The crypto industry is officially under attack, and Binance is the next to feel the wrath of regulation. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin starts the week under 22,000 at the beginning of an important week for macroeconomic data. This comes in the form of the January print for the United States Consumer Price Index, or the CPI, which will be released tomorrow on February 14th. After a strong January jobs report, uncertainty is everywhere as both bulls and bears need the report to go their way. Whichever side is right will drive the market for the next month. Almost every CPI reveal in the last 6 months has been an instant dump, then an immediate recovery after traders digest the data. As mentioned last week, Bitcoin has just had a golden cross on the daily time frame combined with a death cross on the weekly chart, which was confirmed last night. Historically, the golden cross on the daily time frame indicated a big move up, but conversely, the death cross on the greater weekly time frame indicates we're going down. While many Bitcoin investors have noted that Bitcoin typically bottoms roughly 400 days after the bull market peak, the chart suggests that this time is different. Last week, I asked you guys which crypto I should add to my portfolio in the recent dump, and Frank and Earl suggested Matic. Now my question to you today is, which crypto is enough to get rich from? 1 Bitcoin, 10 ETH, 1,000 Matic, or 1,000 ADA? Let me know why down below. Ethereum developers have agreed on February 28th as the target date for pushing the Sepolia test network through the Shanghai upgrade, the blockchain's big upcoming move to allow withdrawals of staked Ether. Sepolia, a closed test network for Ethereum developers only, is the second such network to undergo the upgrade. Earlier this week, the Zhujiang testnet ran its own successful simulation of staked ETH withdrawals. After Sepolia, there's one more test network set to get the upgrade, and then mainnet Ethereum blockchain is expected to undergo the Shanghai hard fork next month. The Sepolia testnet is close to developers who run validators on the network. By contrast, Zhujiang is a public testnet, meaning it was open to anyone, including staking providers who wanted to practice the release of staked ETH. After Sepolia goes through its own round of testing, Goerli will be the final testnet to get the Shanghai upgrade. Goerli will be the most anticipated test, given that it's the largest public Ethereum testnet, representing the last chance for staked providers to ensure that staked ETH withdrawals work before the Shanghai upgrade goes live on mainnet. DeFi exchange GMX logged fees of over $5 million in a 24-hour period over the weekend, which temporarily made it the largest revenue generator in DeFi, ahead of even the Ethereum blockchain. This added to the $120 million in total fees accrued since September 2021, which may signal fundamental strength for GMX's native tokens. The fees are shared across GMX's two tokens, GMX and GLP. GMX is the utility and governance token that accrues 30% of the platform's generated fees, while GLP is the liquidity provider token that accrues 70% of the platform's generated fees. DeFi products like GMX rely on smart contracts to offer users financial services such as trading and lending. GMX allows its users to trade futures or financial derivatives of spot tokens on its exchange with leverage up to 50 times the initial collateral. GMX features such as low slippage, cheap fees, and protection against unwanted liquidations have also contributed to the DEX's popularity. It locked over $500 million worth of tokens as of Monday, with $455 million on Arbitrum and the remaining on Avalanche. DeFi Llama said a portion of Friday's $5 million revenue came as Mechanism Capital founder Andrew Kang closed his multi-million-dollar positions on Bitcoin and Ether on GMX. Last week, the SEC charged crypto exchange Kraken with a $30 million fine for its staking program, forcing them to shut it down and put the market on edge, as it seems the first of the SEC's unjust bans has begun. The chairman of the SEC, Gary Gensler, went on CNBC to lie to the masses about how dangerous crypto staking was on Kraken, and that it was a win for the SEC and the American people are now saved.
These firms, Kraken knew how to register, others know how to register. It's just a form on our website. They can come in, talk to our talented people and disclosure review teams. And if they want to offer staking, we're neutral.
Kraken CEO Jesse Powell responded to this on Twitter by saying, "Oh man, all I had to do was fill out a form on a website and tell people that the staking rewards come from staking. Wish I had seen this video before paying a $30 million fine and agreeing to permanently shut down the servers in the US. How dumb do I look?" Jesse alludes to the fact that there's actually no way to try and work with the SEC, as many US crypto companies have tried to, but are not given any help or regulatory method to comply with. Instead, Gary Gensler sues every crypto company and then goes on TV and says all they had to do was fill out a form with us. Coinbase, another crypto exchange in the US with staking services, said they are standing up for its crypto staking services, claiming that they cannot be classified as a security and threatening to bring the matter to the courts in the United States. Coinbase CEO Brian Armstrong posted on Twitter that the company will defend this in court if needed. Coinbase's chief legal officer Paul Grewal weighed in on the issue in a blog post, claiming that staking is not a security under the U.S. Securities Act, nor under the Howey test. Gruel added, trying to superimpose securities law onto a process like staking doesn't help consumers at all, and instead imposes unnecessarily aggressive mandates that will prevent U.S. customers from accessing basic crypto services and push users to offshore, unregulated platforms. Gruel argues that staking fails to meet the four elements of the Howey test: investment of money, common enterprise, reasonable expectations of profits, and the effort of others. The purpose of securities law is to correct for imbalances in information, but there's no imbalance of information in staking, as all participants are connected on the blockchain and are able to validate transactions as a community of users with equal access to the same information. Furthermore, the blockchain technology can spur significant economic growth in the US, and staking is a safe and critical aspect of that technology. But regulation by enforcement that does nothing to help consumers and drives innovation offshore is not the answer. Luckily, not everyone in the SEC is blind to the overstepping Gary is imposing on the crypto industry. SEC Commissioner Hester Peirce publicly rebuked her own agency over the shutdown of Kraken's staking service. Peirce argued that regulation by enforcement is not efficient or fair way of regulating an emerging industry. The SEC is now alleging that Paxos-issued BUSD, Binance's stablecoin, is also an unregistered security. Paxos officially announced this morning that the firm would end its relationship with Binance for the branded US dollar peg stablecoin BUSD. Starting from February 21st, Paxos will stop minting new BUSD tokens in accordance with the directions and coordinations with the New York Department of Financial Services. Paxos emphasized that all existing BUSD tokens will remain fully backed and redeemable through Paxos' trust company until at least February 2024. Customers will be able to redeem their funds in US dollars and convert their BUSD tokens to another Paxos-issued stablecoin, Pax Dollar, or USDP. Binance CEO CZ wrote a thread this morning saying, in summary, BUSD is issued and redeemed by Paxos, and the funds are SAFU. We were informed by Paxos that they've been directed to cease minting new BUSD by the New York Department of Financial Services. BUSD is a stablecoin wholly owned and managed by Paxos. As a result, BUSD market cap will only decrease over time. Paxos will continue to serve the product and manage redemptions. Paxos also assured U.S. funds are SAFU and fully covered by reserves in their banks. On the alleged SEC versus Paxos lawsuit, I have no information about it other than public news articles. The lawsuit is between the U.S. SEC and Paxos. I'm not an expert on U.S. laws, but personally I agree with Miles' logic here. Miles wrote that the SEC has labeled BUSD as an unregistered security and is suing its issuer Paxos. But how on earth is a stablecoin considered a security when it clearly doesn't meet the Howey test criteria? No one has ever had the expectation of profit when buying BUSD. CZ continued by saying, if BUSD is ruled as a security by the courts, it will have profound impacts on how the crypto industry will develop or not develop in jurisdictions where it's ruled as such. Binance will continue to support BUSD, and we do foresee users migrating to other stablecoins over time, and we will make product adjustments accordingly, moving away from BUSD as the main pair for trading. DeFi protocol Clearpool will deploy its institutional credit platform Prime exclusively on the Polygon network. Rob Alcorn, CEO and co-founder of Clearpool, said, "We've been working closely with the Polygon team since we launched the permissionless protocol on Polygon in June, and we have a strong relationship and continue to work together to deliver institutional DeFi products. Clearpool Prime will act as an institutional-grade capital marketplace where borrowers can create credit pools and liquidity providers can invest to earn yield. The platform is set to start operating in the first quarter of this year." Clearpool Prime's launch highlights a growing trend of decentralized lending protocols catering to institutional capital with TradFi-compatible products after last year's crypto implosion wiped out most of its business. Polygon's global head of institutional capital predicted that 2023 will be a pivotal year for institutional decentralized finance. SushiSwap, the popular Ethereum-based decentralized exchange, announced the acquisition of Vortex Protocol today for an undisclosed amount. Building on top of Say Network, a blockchain using Cosmos tooling, the on-chain trading platform will come under the SushiSwap umbrella as another product and will take a new name. Vortex Protocol is a not yet launched decentralized derivatives exchange and will offer users 10x margin trading on a variety of assets. Say Network and Sushi's newly acquired Vortex Protocol will both launch on mainnet in Q2 of 2023. The move also means that SushiSwap will be the first Ethereum application to make a move over to the Cosmos ecosystem. The advantage of building on Cosmos is that it lets developers spin up blockchains specifically tailored to a project's needs. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.